Romberg in the Money is a rambling weekly stock market rundown, where our hapless hosts discuss current events, tease out trends, and spread wild conjecture in an ever-shifting market. We are rank amateurs. Every word we say is the opposite of financial advice, and should be completely disregarded. Romberg must be placed under the tongue to be dissolved. Chewing or swallowing the Romberg will affect the reaction rate. Buckle up. All right. Good afternoon, Jim. How you doing?
I'm good. It is another bright, sunny day in Hawaii.
Lovely.
And so it's a great day. So what's up?
It is May 28th of 2021.
Friday before a long weekend. Nice.
Yeah, coming into Memorial Day weekend. Got a 3-day. Markets are going to be closed Monday, don't forget.
Yeah, I'll be up at 4 o'clock in the morning watching them anyway. watching them do nothing.
Watching them not open. Perfect. So, you want to start us off with QQQs and tech this week?
Well, so I always like to start off, I guess I should just share this information with you, right?
Yeah.
So usually what I do, so the first thing before I get to there, I like to look at the underlying, the TQQs are leveraged, right? So
right.
I like to look at the underlying indexes, even though they're going to look much the same, right? So
yeah, no, I usually look at just the QQQ. I guess really I look at the QQQM, which is just the mini version of it. It does the same thing.
Yeah, so you can see kind of that we've been, this is a very simple setup. This is not what I use really to do my market work with. But this is what I have for the samples today, and we'll get more of what I deem important as chart technical indicators, maybe in a future episode of this operation here. Anyway, but you can look here and see that we hit a high of 342 on the QQQs, our little tech happiness. But you can also see that we've been really kind of gyrating around here, just trying to formulate some direction. It's really been kind of like sideways in this little window here. Ooh, that was supposed to be a box. Where does that box go? There we go.
Yeah, a general indecision in the market.
There we go. Yeah, and so usually I'll try to find where the market like to bottom out somewhere. A lot of people would, try to draw support and resistance lines. This is a broader kind of viewpoint. So you can see it's just kind of wandering around.
Where's that low for the week at? I can't quite read on there. Is that like 310?
Oh, it's down. The closing low was actually 300 in this window.
Yeah. Okay.
But right now, our wave. The nice thing is that our lows, our down days are not as severe, and we still have. I like to. I love doing stuff like this. So this is just me doing what I do, and then doing it wrong like that. So let me zoom back out here, and what I'll do is I'll go pick a low point down here, and a lot of times I like 3 points if I can get 3 points, and I'll kind of draw, and a better point might be way down there, and come back up and grab all 3 points.
Yeah, you can see it's basically the same slope there too.
Yeah, it pretty much is. And that gives me kind of this kind of like bottom line kind of grasp about where my risk happens to be sitting around at. So I don't know that I'd really be buying the Qs here, but
Yeah, I'm just not really excited about anything this week.
Well, if you looked at the indexes, today, and this has been the last 2 or 3 days, everything's up like 0.18% or 0.22%. But it's like it's kind of like all the indexes got together for family dinner and got really full, and now they're just kind of like chilling out on the couch.
There's that kind of steeper rise, and then just everything's just kind of gone horizontal since then.
Yeah, so they're in a FOMA, right?
Yeah, there was kind of like, if we're looking at QQQ, you can see like as far as our 5 day goes, opening on Monday, market kind of decided, okay, last week might have been might have been lower than it needed to be. It bounced back up to where it had been, and then it just sat there from
Yeah.
about 9 a.m. Monday through today.
So exactly. So obviously, and some people might follow the VIX, but obviously volatility has declined.
Yeah, what is the VIX looking like today?
I don't know. That's on you. You can
I'm
look that
checking.
one up. But the other thing that you'll note while you're doing the Chucksy, I like to watch these volume averages to see where we have excessive volume. So, when you see down here, like in here, you've got some excessive volume over the average of 45 million shares, and that's like 91 million right here. If you follow that line up, that's a lot of selling going on, and a lot of times
a lot of selling at the bottom going on.
Yeah, so you can tell when there's that much selling in the market on volume. It's not always a perfect indicator, but that kind of would lead me to think that this is kind of exhausting itself up in here, right? Because it's just kind of running out of sellers, right?
Right,
So
exactly. I'm sure there's a
like,
candlestick term for it where you've got the kind of a doji following the
well, you're back.
bear hammer.
Yeah, this is back to an inside bar right here, actually.
Yeah, inside day, and then you see that bounce back up. It doesn't quite get there.
Yeah, well, the following day, the bar's red. This is always an interesting thing for me to look at, is trying to get my head around this. And usually it's because it opens higher and closes lower, but it's still higher than it was the day before. So you end up with this nice positive volume down here with a red bar up here. And usually I'll look for that and say, you know what? This is likely an upward movement story. I got a lot of selling leading up to this point, dropping off.
It's kind of petered out, like there's
more. And then there you go, and Peter out, Peter, pumpkin eater, off you go.
Mm-hmm. So that's our Qs.
Yeah, so the TQQs, which obviously is our triple leverage, right? I think we talked about this kind of last week, that this is kind of a go nowhere week. It was probably going to end up being kind of a sideways week.
Yeah.
Sideways to I call it upward biased, but still more or less sideways.
Oh yeah, because it's just triple leverage of the QQQs, which barely moved. So they also barely moved.
Because I've kind of got 3 low points in here. This is the other place that a lot of times I'll use these. I like these tools on Thinkorswim. Not everybody has Thinkorswim, but it's a handy tool. But you can look right here. You can really kind of see there's your kind of upward resistance.
Mm-hmm.
And
where's that at?
Also,
it's like 102-ish.
It's like 102, 10, actually a little higher than 102. And then
you range for the TQQQs.
Yeah, and you've got a bottom right there. You got a touch bottom right there.
That's
and
basically like 90-ish.
And then you had like an open and run up. So
yeah.
So that kind of tells me that this is my trading range sideways. Doesn't mean we're heading up from here, because we got some resistance to get through to get there.
Yeah, the green long candles look good for the game, but that was like Tuesday, Wednesday.
Yeah. So this is like 102.
It's just kind of once again petered out. The I forget what it's called here, but where we're seeing that hammer on the today is not usually a great sign, but it doesn't.
Yeah. Well, again,
it's mostly sideways.
Here's the upside. It tested upward, right? There were some buyers, but there wasn't enough buyers to keep it there, right?
Right.
But that
tested up, got pushed back down lower than it opened, but it basically closed where it opened for all intents and purposes.
But I had positive volume on it, so that makes me. This doesn't matter so much because I have no volume above average. In fact, I'm below average. And this is a soft Friday. That's why I'll call it a soft Friday. I just invented that, by the way.
Okay.
Coined the phrase, trademark, Jim Howe, soft Friday. Because it's expiration day. It's also people are closing out their positions. It's long weekend, so the really active traders are likely closed their positions today. They want to carry them into the end of the weekend out of
who knows what's going to happen
unknown
Monday.
Fears of the news cycle. And so
have you heard this sell in May and go away thing, market timers?
Yeah. Yes. Sorry.
All right, that's probably enough on tech. What do we got up next?
So where does our money go? I can tell you where I've been putting my money.
Where have you been putting your money?
Well, I talked about it last week. So although this is a triple leverage, I can show you a single non-leveraged
stock for fast.
Very similar, right?
I was just looking at this actually. I was looking at it before the show, and I was looking at VONG, which is the Vanguard ETF that tracks the same index.
So the interesting thing about this is it's a lot like the TQQs. If you really look at it, it's a little less volatile in the same.
I was going to say it does not get the same swing, but
you're still looking at the same problem. You've got this nice little box.
Very nice little box.
And that little box is going sideways. And so, when I trade these kind of things, I of course, we're going to talk about some other point down the line, but if anybody's interested in understanding varying option trading abilities. But so this was a down day, so I did some profit taking here, and I set up some new put. I sold some new put options here because there was a little weakness. So I like to sell
puts today.
Yeah. I always sell puts on weakness if I have cash around, and I don't think anything crazy is going to go on.
Well, so here's what I'm looking at for this. I'm seeing that we've tested this upper limit of like 121.25 3 times in a row this week, and each time it's been smacked down.
It's almost 4 times, actually.
Yeah, exactly, 4 times. Pretty hard too.
Right.
So I'm not stoked for where fast is going to go on Monday, or Tuesday. But that doesn't. I mean, who knows? But my hopes are not high at the moment.
All right, friendly bet. I think it's going up.
You think it's going up? What's your shot call? Give me a number. Where does fast end next week based on? No, we'll do this. We'll do this at the end. We should do spider though before we get too far in here.
Yeah, it's just that. Okay, well, I'm just gonna say I got good positive volume going. We had sellers in here. The sellers couldn't get the job done, and the buyers still came running back in to do some buy-in.
That's true. There is that long tail there at the bottom.
Right. Well, it's not a long one, but it is. It tells me that there's more upwards. Yeah, there's buyers up there, and I would have rather seen more volume on it, but I'm going to leave it with that for the moment because that's what I think is going to go on. And I think that financials in general just have a long run ahead of them. And when you look at this chunk ahead of here, right here, right? When you look at that chunk, you have to acknowledge that this from here of $93, running up to running up
sure, wherever
in
the 121 range, the 122 range.
That's a pretty good run for
Yeah, and that's probably why it's gone sideways. Is we had that 3 run, and it's testing it, and now we're just kind of consolidating in this range.
It's essentially increased 25% in 3 weeks. So
I hope you all bought 3 weeks ago. I hope you all bought on March 31st, honestly, of 2020.
Yeah. Oh yeah. That's the part that I didn't show anybody. Some of these averages can be a little bit.
Hey Jim, remind me next time right before there's a pandemic to move all my money into cash so I can buy that dip because I forgot to do it this time.
Oh, okay. Well, I didn't buy that dip either, but I caught a piece of it. Let's put it that way. Yeah. All right. Well, What do you want? You wanted to look at what the
We're
SPX?
gonna do spider diamonds next.
Diamonds. Yeah. Whoops. Yes.
Just do SPDR or which it doesn't matter.
Well, so the diamonds are a girl's best friend, right?
Sure. We'll go
So obviously, this is where the story starts to play out with, you know, the recovery story, I guess, is the best way to put it. And
hold on, what scale are we looking at here?
I don't know. Hold on. Let me get back here. MSDD.
I say that's not the
well,
right.
First of all, it's not the right one. Let's get the right one, Jim.
What is this ticker?
Okay, there we go.
There we go. I was like, that is not even remotely close.
You caught me, in one of my old man moments. Anyway, so this is one where
not every stock ticker is just the first 3 letters in a row.
So I honestly, right here, you can see that there's kind of a support line right there, right?
Yeah. What are we looking at? That's like right. 335.
335, right. I don't really have a really good resistance line here, so I always try to kind of figure out where the market doesn't like to go, at least, for the current set of conditions and everyone's mindset and how
even when everyone knows that starts to make people feel like they should be buying again.
Yeah, so this seems to be the line right there, and everything, and there's no overhead, what I would call overhead resistance to that line. So there's nothing up here that tells me that this is going to stop.
Something kind of happening around like 345 where you can see it's just losing steam. I'm not sure that that's a resistance line.
Yeah.
It's just...
Well, we hadn't really got there yet, but if I was going to pick a resistance line, it would probably have been right about here. And it's already through that resistance line for 2 days in a row.
Right.
And that, even though things don't always go up every day, right? Mm-hmm. It kind of tells me that there is a propensity that it will continue up.
Right. What I'm finding really interesting about this chart is how we're seeing 4 red candles in a row with an upward trajectory. So we're getting an air gap where it's closing low and then opening above that previous day's open and then closing lower than it opens, but still higher than its previous close. So it's just a strange setup where basically people overnight are deciding, they sleep on it and they're like, this is still a good buy.
Yeah. Right.
It's not quite holding that ground like intraday, but the next day they're like, it's still worth buying.
Yep. So the pre-market's opening them up, and then the market general population is kind of pulling them down a little bit.
Oh, strange.
Anyway,
what's your shot call for diamonds next week?
So there's also, just FYI, there is a triple leverage for this also. Called the UDOW. 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 And so these things really mirror each other, but it lets you participate in that Dow marketplace.
If you're feeling bullish, it's a great place to be.
Yeah. In a triple leveraged operation as well. But you can see it basically is the mirror. It's just that you can buy into this for $73 instead of, $300.
Yeah, that's one of the things I did like about TQQ over TQQ over just triple Q is just the price point. Like you can get more actual shares, which opens you up for more option plays.
Well, yeah, if you're an option trader, you need to have 100 shares of something. You gotta have a contract
buy them stacks
value,
of 100, right? And if they're $250 a pop, that's more expensive.
Yeah, and then you wanted to know about the SPX?
Sure.
I'm assuming. And interesting, the SPX looks a lot like the Dow. I mean, you could make all the same analogies.
I had said spider, but it's fine.
Oh, spider?
It's the same. It's all the same thing. SP, yeah.
Yeah. I'm sure the chart looks pretty much the same.
Yep. And it's just 10%. It's just 10% of the buy-in.
Yep. So you have the same kind of box going here. You get a line.
Because it's traced to the same underlying, so it doesn't matter.
Yeah. Got your support at 405. Got your resistance at 420, and
you see that exact same pattern where you're getting that like air gapped upward red candles for the last 4 days.
Yeah. Yep. Higher opens and a little lower closes, but higher than the previous close.
Yeah, weird.
All right. Anyway, yeah.
So I think that's all our market news for this week. One of the things I wanted to ask you about is, I was kind of browsing ETFs today, and I was thinking, which market would you be interested in, like, finding exposure to that you're not already invested in? Because I know you do a lot of these, like, really large index tracking ETFs. Is there anything in particular that you think is it worth looking into? Maybe not buying, but at least keeping an eye on.
Well, I like diversification because it helps me with risk management. So I actually do invest in the TQQs, which are not for everybody because they can be, when they get crazy, they can be emotionally draining for people that they get nervous about the value of their money.
Exactly. If you're invested in them day to day, watching that number it's exhausting.
Yeah. But I do own the UDAO, which is the diamond ETF. I do own the FAS, obviously.
Right. So you've got financials,
financial exposure,
and basically blue chip.
And blue chip, yeah. I do look at the let's see. I think it's. I don't have them all. I'm not a library like a lot of people. I do follow the SPXL also, and not that I'm buying again these ETFs, but I might be selling options into them. But nonetheless, this is a good way to get exposed to the S&P. So I track that, and
that reminds me. We've been talking just because the stock tickers are similar. It reminded me. We've been talking last week about semiconductors, and we did find that the semiconductor ETF, which was SOXL, I think.
Yep.
Yeah.
And basically, I mean, if you're trading in the TQQs, or
you're already exposed a lot.
You're already exposed to those chip, and you can tell by the charts because they tend to track.
It's very familiar to what we were just looking at.
Yeah.
Although once again, talking about buy-in price point, like SOXL is only like 35 right now ish.
Yeah.
Yeah, that's way more affordable to get into.
It's 38.78. But
not that I'm super big on where it's at right now. Like I said, I haven't seen anything like this week that I'm excited about going into next week.
Mm-hmm.
Everything's just kind of gone sideways, and I don't have a lot of confidence in anything going in any direction.
Yeah. So a lot of times, I'll use, another tool. And again, I don't know what everyone's tools are.
Sure.
And how they would view any of this stuff, but I use the average true range tool.
By the way, if you're listening to this and you know a tool that you really like and would recommend for others to use, please send us a comment or send us an email, whatever works best for you. Our contact is in the show notes.
So I'll look at these average true range. I think this it's a 14-day ATR, which is an average true range. It aggregates 14 days of trading, comes up with tells you kind of what the wing looks like. So what your risk is on a daily basis. The stock currently is trading, could be trading as much as $2.55 in a single day, top to bottom.
Okay.
Or more, but
sure, but that's the probability.
Yeah. So if you're buying 1,000 shares, you could be prepared for what kind of fluctuations that you might have to stomach while you're looking at it every day. And if you look at back in the TQQs, you'll see that those can be quite large for depending on, that one's $4.47 on a 14-day moving average.
I was gonna say, you can see, what was that back? It looks like mid-March, which, that
back in
checks
here,
out.
right?
Yeah, we were seeing, what was that,
back
like
in there,
$6-7 swings in a day
Yeah, exactly.
on average.
Yeah. So
Fun time.
That can make people really nervous.
Well, see, that's a great time to just buy something, watch it vibrate, and then when you get a good return on it, just get rid of it.
Yeah.
As far as options go.
All of it, I don't know. I wish it would be nice if a few people had some comments to make or some questions to ask, just in general, because everybody. Me and I have another brother. I have a lot of brothers, by the way. And
how many brothers do you have? I know of two offhand.
I have 4, and the other one, though, he trades differently. He has a different kind of game plan. And
is this your advisor we were talking about last week?
No, he's not the one that I do the opposite of. That's the other one. So, but the first person, I don't know what kind of people are watching or listening, but you have to know what you want to be or what you're going to do before you can really decide how you want to play or invest. Because some people are investors, and if I could tell, if I had a child, I'd say, okay, you know what, let's go buy one of these triple leveraged indexes, and we'll just do it incrementally every month, from the time you're one.
Park the money there forever. Now, what's so funny to me is, like, they specifically on all of these triple leverage say these are not for buy and hold. Don't do exactly what Jim is recommending right now.
Right. Exactly.
So as we say in the show opener, this is not financial advice. Don't do what we're telling you to do. However, if you want to buy it for your child,
why would you think that they would tell you that, right?
Well, I think part of it is it is so volatile.
It is volatile.
They don't know what someone's particular situation is.
But as goes the index, goes the ETF, right? So.
Well, right, but like they've said, like a 7% increase on average per year does not equal a 21% increase in the triple leverage. They're a lot more vulnerable to vibration. Like in sideways markets, triple leverages actually lose money compared to their non-leveraged kin.
Oh, they can.
Yeah.
That's true. But but that's the point.
I agree with you, though. I think, like, if you're looking at, like, a young kid or 20, whatever, and you're saying I'm not going to be retiring for maybe 80 years at the rate things are going right now, park it in a triple leverage. Like, at least some of it. You don't know how it's going to end up, but
right.
I am taking that bet. Although I do have to add here as kind of a little side note, they do typically have higher what's the word I'm looking for here, like management fees. So something to keep in mind.
Yeah, I'm not a So again, it goes back to the question about what kind of investor you are. Mm-hmm. I don't worry about capital gains taxes or income taxes either, because my philosophy is simple. If I'm making money, I'll pay. I don't care. Right. But I'm not going to couch my investments or my program to save myself tax dollars, because inevitably.
No, I'm not talking about tax dollars. I'm talking about the actual, like, why can't I remember the word for this? Expense ratio? No. Yeah, no, it is expense ratio. Like TQQQ has a 1% expense ratio.
Yeah, but I don't care because I make 36% a year. So who cares?
You have recently made 36% a year.
5 years running, so I guess recently.
All right.
I'm just
5 years of the greatest bull market in recent history.
Yeah, I'm good with that. I'm not saying I'm the brightest bulb in the pack. I'm just saying I'm not going to worry about 1.5% or 2% or 0.75%. Even if I was making 10% a year, who cares? It's just a fee. Pay to play. That's what I say.
Very true. Very true. All right, so that's kind of that. So let's get into the fun part here. shot calls. What are we looking at for let's do TQQQ because I know that's what you're tracking more. Where do you see our box for next week?
Well, honestly, between hold on a second.
As a reminder, it looks like we were trading like 87, between 87 and 103 this week, looks like.
Yeah, I don't actually. So, nobody can forecast the market, right?
No,
nobody can really ever know.
This is just for fun.
Right.
I just want to see how bad our suggested thought process is.
Obviously, it's just for fun. That's just the way it works, right?
Mm-hmm.
There is, let's see if I can grab this here real quick. Another one here. I'll just tell you how I would view this. I use a probability cone, which is used in Thinkorswim's analyze component here.
Once again, we are not sponsored by Thinkorswim, but if they would like to sponsor us, feel free to reach out.
Yeah, there you go. Let's see here. Where'd it go? Where'd my cone go? Hold on a minute. Thought I told it to do something, and then it didn't do what I wanted it to do. Probability. There you go. Apply. All right. So when I do my planning, I mean, this is kind of a crazy way to look, but I first decide what's my bias, right?
Mm-hmm.
So in my forecast, for what I think will happen, maybe next week, at least initially, unless some crazy news comes out, is I'd be looking at that line right there, right?
Mm-hmm.
Stretch that line out, got my 3 points at the bottom, and then up here, I have my my box. My box will run till 6-1, and between 6-1, I could be looking at a number that's all the way up there, because this is a highly volatile stock, remember.
Yeah.
It can run pretty expensive, and I'd probably be looking for something in that window there. It's a pretty broad window, but when I'm planning to do purchases, or if
that says like 87.5 up to 117.
So it's basically 90 to about 117. I mean, that's the potential window that could roll in my viewpoint. I've had fairly, I mean, that's a big window to guess in, but what do I use the window for, right? I use it for what's down here. This is my worst case scenario, or lower, right? So,
I mean, depending on how you look at it, that's your best case scenario. That's when you can buy it next week.
Well, so what I would be doing is, I am a strong believer in protecting what I invest. So that is on the TQQs. I would at least be running with a stop loss somewhere. It wouldn't be that, but my stop loss would probably be up in here somewhere, right about $98, and I would chunk a stop loss there, because I don't want to be down here, because if it goes down there, it might bounce back up, but I'll be able to buy it again if it bounces down here and checks this bottom. I'll be able to buy it back somewhere in here. So I'll have in fact, I'm just going to tell you straight up, I do have stop losses on this stock because I do own more than options. I do have physical ownership. So that's where my stops are at. They're at $98 because I'm not going to risk.
I'm going to push a little bit smaller window. I think I'm going to say between. I think we're going to stay like 90 to like 109. I'm looking at this peak here where we're up, like we're having a hard time getting above 109, and I'm not as convinced that we're going to see that run up there.
I didn't say we would. I just
no, I know. I'm just saying like maybe 115, but.
Oh, are we playing? What's that game where you guess the grocery costs?
Yeah, no, exactly. I'm going to come in $1 under you on all of your guesses and be like,
You're
look, I got it. Nice try,
you're
Jim.
you're a dog. Actually, actually, you should probably peg it somewhere about here. That's where you really should peg it, about 112.
Well, that's why I said it was 109. I think, like, that's probably honestly, I see 112 there, the 111, 181 back on April 16th, and then 26th, pretty much the same area. Yeah, I don't know. I'm happy with like 110 basically.
All right, mark it down.
I did. Got our bets are called. Uh, Fast. I wasn't even looking at Fast. I was looking at Vong this week, but let me kind of project here. While you do your probability count, I'm just gonna fly by the seat of my pants.
Well, yeah, I'm not a. I don't wear pants because I live in Hawaii.
You don't wear pants because you work from home. Okay. 122. Let's see here. Where's my 6 month? Once again, we're kind of at all-time highs. Like, well, not all-time, but at least, well, no, it pretty much is all-time high. 122 right there. I would not be surprised if we test that again this week. I like Fast. I think Fast is going to do well. Let's one pull a number out of my ass here. 109 to 120. Ah, God, that's the $20 window, but 109 to 129.
Well, that's crazy. I think maybe we might see a retest of 125 again by Friday. That's
Yeah.
That's the best I'm going to say. On the lower side, realistically,
I see that 110 back on May 12th, and that's where I don't think it's going to go below that unless something crazy happens.
Well, I've been selling puts on this at 115.
Yeah, and we're seeing those recent bottoms out. Like May 19th was there on there. May 25th, 3 days ago, we were down at 116, and that's where it bottomed out. So I think the 115 put is safe enough. Especially if you're getting a good premium on them, that'll protect you probably down. What are you getting at, like, premium on there? Down 113-ish?
Well, it obviously depends on the time window.
Well, for sure.
But January 22, 6 months away. I think today I sold one for $18.
Okay.
So that puts me at a break even around.
We are talking a very different box.
$98 maybe on break even.
Yeah.
And about a 18% ROR, return on risk.
What was your number for the end of next week?
For what?
For Fast. I think you were saying like 115, 125.
I'd say 115 is probably the bottom threshold. My stops are around 115. Yeah, 125. I think we'll test that again this week sometime. Coming up next week.
My window's bigger, so you're probably gonna win. That shouldn't be there. Hold up. There we go. We got it wrong. All right, Spider, or whichever your preferred Dow Jones tracking system is.
I like UDOW.
UDOW. Okay, you're triple leveraged.
This is a little more questionable in my head only because the opening stories are still kind of running the market show a little bit. Maybe things are good, then maybe not quite as good, but then they're good again, and they're maybe not quite as good. The market's not settled on the more traditional companies yet, but
it's got a good uptrend
recently.
Look at the 1 month, look at the 3 month, like it's going there. I'm not going to say it's
so here. I don't just make guesses. I would always kind of line myself up with what the chart says, and I see 71. I would not want to be in if it breaks down below 71, so I'd be stop lossing at 71. And then as far as what I think, it's going to do, I think it might revisit, the 75 range maybe. I don't know if it's going to make the high again. I don't think it
I'm going to
will.
say the 74,
Yeah,
75
yeah,
sounds
yeah.
unlikely to me.
Yeah, well, I think it'll see 74 next week, 74.50 to 75 maybe.
All right, 74 on the high side. What was your low? 71.
I'd be out if it breaks down.
It's a very
Uh,
narrow window you got there.
well, this is not a high. This is not a high. The volatility in the stock is not that high as $2 on the ATR right now.
Yeah.
So, you know,
I mean, you can see it just looking at the chart. It's not moving a whole lot.
yeah.
I do wonder about the getting out at 71. Like you're already, I don't know. Nah, sure.
Well, so 71 was the resistance level. I mean, essentially, you can see it.
Right.
That's where
No,
like where
what I'm
it
looking at
did.
is back on May 12th, we went down to
Yeah.
that 67 range and then bounced back out of there.
Yeah.
I'm not sure that like having the stop loss at 71 is worth it, I guess, to potentially hit 71, get sold out, and watch it bounce
Well,
back.
so there's your individual kind of risk tolerance. I spend more of my time trying to figure out the best way to not lose any money. That's kind of my program. That's kind of
Right.
what I do. So, if I drew this box out here, because that's
Mhm.
kind of the box, right? That's the window that I don't want to see that stock come back down into. If
Oh
it
yeah, I was gonna
does,
say that is not. I don't think that's our trading range for next week.
no, 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 no. I don't want it to be there. If it goes
Right.
back and it hasn't established itself into a new trend or anything that I can recognize visually in any kind of a pattern. So I just wouldn't. I wouldn't necessarily say that I would get out at 71, but I'm just saying if it gets to 71, if it breaks down below in here again, it's probably going to come back down here and retest that low again at
Right.
$67.
Right.
You know, and I
No,
just don't.
that's
I
exactly
don't.
what I'm saying. Is that
And I
yeah,
don't want to be on that part of the equation. That's
yeah.
just my preference.
I think what we're gonna end up seeing once again, based on nothing but just how this week has gone, is kind of that similar story of the higher open to lower close. Um, I wouldn't be surprised if we saw more of that next week, where we're seeing like an open maybe Tuesday of 75 and then just kind of tapers off like that sentence.
Yeah. All right. Well, what else? Anything else?
Uh, is this the week where we buy gold?
No. What
Not this week. Okay, cool. Good to know.
are you gonna do with it? You gonna eat it?
Uh, I don't think you're supposed to do that. Although, they do have all those fancy gold desserts now.
um, Storehouses of wealth are great, and there's nothing wrong with them. Uh,
I think I'm gonna read. I'm gonna workshop this question. I think what I'm gonna change it to is this the week where we buy SQQQ instead of gold?
no, that's a. So what's the golden rule of Jim Howe? The golden
Don't bet
rule:
against the market.
never bid against the trend. I wish I had my 5-year. Whoopsie doo. I don't know.
I mean,
Never
1 year's
bet.
gonna do
Never,
just.
never, never bet against that trend. Is it going to go down? Yeah. Is it going to go down today? I don't know. Next week? No, I don't know. There's a lot of movement to go down to start shifting the direction of this trend. And that long-term trend, if you looked at it, is if I add that extra study in for a channel, right?
Yeah.
Is oopsie doo. I could spell channel, price channel, simple channel, standard deviation,
No,
standard deviation. Yeah,
I get this is not what you bet against. But
no.
one thing I am kind of wondering, and if maybe you can see if there's a play here in your head, like a long-term call or put, however, whether you buy or sell, on SQQQ if you're thinking that there is some kind of market instability coming.
Now you're drilling into. Uh, I don't know that I would.
Well, I guess there's no.
I don't think we should. I don't
just...
think we should really drill into oh gosh, into options.
Okay.
That's just a whole. That's just a whole different show with a whole different kind of strategy and mental acuity to attempt to do. I'm willing to do it.
Here's we're going to dedicate an episode to options and then never talk about it again.
Well, no, we can totally do it, but there are so many ways to do that. I mean,
sure.
we could dedicate.
That's the thing is like even talking through it, you're like, okay, well, am I buying the call? Am I selling the call? Am I buying a put? Am I selling a put? And then realizing that two of those both play the same way in a way. You're like, oh, this is a bullish bet. This is a bearish bet. And then, especially when you're talking about like the PQQQ versus SQQQ, they're just the mirror image of each other.
Right.
All right. Well, I think that's a good show for this week. I don't really have anything more to add here. Do you have anything you want to go off on?
I'll just leave you with this. I rolled the channel into the UDAO. You can see that.
There's our midline. Yeah.
This is like 1,200 days, so it goes back a ways. 4 years roughly.
And it looks great. Like that is a well-lined channel.
So you're smack. I mean, this is what I would consider if you're a long-term investor, this is a fairly safe place to be in this particular stock because it's you're right center channel.
You're not overbought. You're not seeing any kind of like major shift.
Yeah. So and the same thing in the TQQs.
I am surprised. Just while we're talking about it real quick here, like look at our trading volumes, and this one same thing. Like look at the drop off in trading volume as we've gone up in price.
Well, and so this happens all the time though. This is how the market runs. If you go down and look at this kind of, I mean, you'll run selling, will run up, and then in fact these moving averages really accentuate the fact that the market moves in waves. I mean, there's wave theory, there's all kinds of weird ideas, but nothing ever goes straight up forever. Everything has to constantly adjust, constantly, become, has to be reevaluated. The companies have to be assessed. I mean, there's just a lot that goes into these things. So these waves are, in my opinion, I just call them, these are the emotional waves of the market. The market has some fundamental, and that's another thing you can talk about in the future if you want to, is fundamentals versus technicals, and then hybrids of fundamentals and technicals. But in essence,
and then whatever the hell Tesla runs on.
Right. And this represents a lot of companies. So one company could be doing really bad, another company could be really good, and nothing happens at all. But, so this is the emotional day-to-day activity of the market. But these long-term channels, they really kind of define what's the direction.
Right. And I'm feeling a lot better about TQQ with this channel up, though, I gotta say.
Yeah. And so the same thing with FAST. FAST is the same in the same boat. You've got in the upper.
FAST is above its channel.
Right. But fundamentally, down in here, there was concern about how the financials are actually going to do. Nobody really kind of knew how that was rolling. You start to see, if you go look at the individual stocks that make up some of the FAST, you start to see they start taking off when I mean these are financials, for God's sake. So if you're in a pandemic, they don't work out so well.
The one that I once again, whole nother show, another week, but the one that I'm following and like really has caught my eye is all these like REITs that got slashed during the pandemic, but you're looking at their sheets and how they performed this last year, and they barely even took a hit, like if at all. Some of them haven't even actually lost any income. They've put people on like a couple of payment programs. Like I follow Sabra, which is a healthcare real estate, and they didn't really suffer from this at all as far as their like balance book goes, and
Yeah.
yet they're still trading at like a discount based on where they were the day before the pandemic, hit the stock market. So I'm
I,
curious if there's a play to make there. I haven't decided yet.
I don't follow REITs. They're a different animal for me,
Hmm.
and I have a kind of an underlying. I would be well, for me, I don't trust them because it's like I know banks as an example. If a bank gets a repo, for instance,
Yeah.
piece of real estate, they'll hold the real estate at value. They're the last value of the real estate involved in any package is the value carried on the books forever, and it doesn't change until it sells. You
Right.
can
I'm
lose.
not talking about flipping REITs. I guess I should
Yeah.
clarify. I'm talking about property management ones.
Oh yeah, because the actual REITs you can get. I mean, you can literally. They could lose half the value, and it wouldn't show up because
Yeah, I don't
they
trust
didn't
those
sell
either.
anything.
All right, you're getting a lot of construction noise
Yeah.
now, so it's probably our sign that we should cut the show off here.
Oh, sorry.
All right, all good. All
That's
right,
what
well,
happened.
thank you, Jim.
All right.
Thanks for listening, everyone, for our second episode of Romberg in the Money, and we'll see you all next week. Enjoy your Memorial Day weekend.